Now, let's talk about financial assets because that is what runs the modern economy. In fact, that is what most people know when they hear about investment. What are financial assets? Financial assets are claims on value that exist through contracts, not physical objects. So you don't owe something tangible. What you owe is an agreement, a right, or a claim. So when people say, I invested into this or I invested into that, what they are saying is that they have financial assets. Now, here is a simple analogy. Think of the economy as a large system of promises. You promise to repay some money, or you promise to share profits, or you promise to deliver value in the future. That is what financial assets are built on. Now, we have three major structures in financial assets, three major categories of financial assets. Number one is debt instrument. Debt instrument. This is when you are lending money to someone. You give money today and you get it back later with interest. Examples of debt instruments include Treasury bills, government bonds, corporate bonds, fixed deposits in banks, etc. In this case, you are not an owner, you are a lender. You are lending money to either a person, an institution, a corporate organization, or the government, and you are earning based on the promise of repayment. Number two is equity instruments. In this case, you are not just lending, you are owning something. So you are not lending money, you are part of a business. You are owning part of a business. Example of equity instruments include shares, stocks, and private equity. For example, when you own shares in Zenith Bank PLC, you are a part owner of the institution. If the business grows, you benefit. But if the business struggles, on the other hand, your investment is also affected. The third category of financial assets are called derivatives. And this is the most misunderstood category for most people. Now, a derivative is a contract whose value depends on something else. It is not an asset. Its value depends on something else. And that something else could be a stock, could be a currency, could be a commodity, it could be an interest rate. So you are not just investing directly in the assets, you are investing in the movement or outcome of the assets. So that is what it is. Now, why do we have derivatives? Derivatives are often used for risk management, they are used for hedging, they are used for price protection. Now, for many of us that are individual investors, you may not be exposed to derivatives, but it is worth knowing about. It is good that you know about it. So financial assets are not about owning things, right? They're about holding structured claims on values. And it is good for you to understand that. So why does it matter for you to understand what financial asset is? Now, most people treat investing like shopping. They just go to shop and then they just start buying things, and they may not even prepare for what they're going to buy. But financial markets are not shops. They are systems of obligations and rights. So once you understand that, you stop asking, what should I buy? Because that's the question I get from most of the people, like I said at the beginning of this series. People say, what should I buy? I have money, what should I put my money into? It's not like that. So what you're supposed to look at is that what are the various financial assets, what are the various assets, and how can I fit into each of them? So far in this episode, we have learned about the various categories of financial assets. One is debt instruments like treasury bills, government bonds, corporate bonds, treasury certificates, fixed deposits, certificate of deposits. The second one is equity instruments like shares and stocks and private equity. And the third one is what we call derivatives. Like you hear of future, you hear of options, you hear of swaps. But like I said, most beginners don't even know about these things, and you don't even need to worry yourself about it. But the reason why I included it in this series is for you to know what exists in the first place. So what we're going to do in the next episode is to look at the next financial asset, which is real assets. Now, for many people, they need something that they can see physically, and that is what real asset is. They exist in the physical world. That is where we're going to go next. See you in the next episode.